Six-month cash profit down 1.9% after bank set aside $375 million provision against potential fines. The Commonwealth Bank reported a half-year profit fall in its final results under outgoing CEO Ian Narev. Photograph, Daniel Munoz, Reuters. The Commonwealth Bank has seen its half-yearly profits fall after it was forced to set aside $375 million as provision against potential fines for alleged money laundering and funding of terrorism. Australia's biggest bank, reporting its final set of results under outgoing Chief Executive Ian Narev, said on Wednesday that its six-month cash profit fell 1.9% to $4.735 billion. Excluding the provision, earnings for the last 6 months of 2017 rose 5.8% to $5.11 billion, narrowly missing analyst expectations, and the bank lifted its interim dividend 1 cent to $2. Commonwealth is being prosecuted by the financial intelligence agency AUSTRAC for 53,700 breaches of the Anti-Money Laundering and Counter-Terrorism Financing Act 2006. AUSTRAC alleges the bank allowed its smart deposit machines to be used by 4 money laundering syndicates, including 3 linked to drug importation and distribution networks. The bank said it believed the provision of $375 million was a reliable estimate of the penalty a court could impose based on currently available information. It also set aside $200 million to cover legal costs. But one legal expert believed the bank had underestimated the fine it was likely to face. Each breach could in theory cost the bank $21 million, and it is understood that AUSTRAC wants the penalty to be at least $1 billion. Helen Bird, a corporate governance specialist at Swinburne University in Melbourne, said the amount set aside by the bank was too low. The provision of $375 million is too conservative, said Bird. It is based on the low end of the scale of expectations, and it indicates to me that they think their defense will get up. They will say the computers stuffed up and the transactions were not reported. The bank's results come at a time of intense scrutiny for the Big Four retail banks, which between them provide 4 of Australia's 5 biggest companies. The Senate on Wednesday passed a bill to increase the regulation of the sector. The Banking Executive Accountability Regime, BER, will be established from the 1st of July and will require banks to conduct themselves with honesty and integrity, while remuneration obligations will also be imposed on directors and senior executives. The banking regulator will have beefed-up powers to hand out substantial fines, withhold bonuses, and more easily disqualify people for poor behaviour. Also on Wednesday, a Productivity Commission report said that Australia's big banks were being allowed to exploit loyal customers, and the sector faces a sustained public flogging when the Royal Commission into Misconduct in the Industry opens in Melbourne on Monday, the 12th of February. Narev will be spared the spotlight after announcing he would be standing down from the top job 2 weeks after AUSTRAC launched its lawsuit in August. However, he said, a great deal of effort had been made on fixing our mistakes and becoming a better bank. We recognize and regret that these costs arise from our failure to meet some standards that we should have. Narev said he remained positive about Australia's economic prospects but warned about continued market volatility that could affect the country and the bank under his successor, the bank's retail chief Matt Cummins. Market volatility remains a risk given ongoing global uncertainty as to the pace and extent of rate rises. Narev said, market movements over recent days highlight this risk. Shares in Commonwealth were down 0.17% to $77.27 on Wednesday morning.